Alright, hello everyone and welcome to the Golden Bull channel. It is March 26th and today we're going to be discussing a hard question with no easy answer. Is it time to buy? So the recent market conditions have by no means been normal. We've seen 11% jumps in the Dow a few days ago. Markets just haven't been able to make up their mind which way they want to go. We've seen days that opened low and ended high. So how do we navigate the turbulent waters in the market? I've pulled up here a daily chart of the S&P 500 and we can see that the rapid decline that we had from February 20th all the way down to March 20th, so a span of a month. And before we begin talking about whether or not you should buy into the market, we should first address the volatility in the markets. The relief rally has largely been inspired by the rescue legislation that's moving through the government, so there's a good chance that the market will calm a bit once the bill makes it to the White House. Maybe stuff won't quite be so up and down. So now that we've addressed that markets are still flying up and down, we need to look at whether you should be buying right now. The coronavirus seems to have thrown investor confidence out the window, which is why we had this sharp decline in a matter of a month. So all of these strong companies that people had faith in have gotten absolutely obliterated. If we look at things like Delta or maybe Bank of America, Citigroup, all these strong companies with solid balance sheets, they've had 50% drops. In fact, right here we have the daily chart for Delta, and we can see that a few months ago, or I guess a month ago, January 17th, it hit the high of 62.48, and from there it has just plummeted. So unfortunately with the coronavirus, that's kind of the case with a lot of these stocks right now. And you're seeing a lot of stocks that are, they're good companies, they're solid, they're able to maintain their footing, they're just getting pummeled. So I think the most important thing to remember is that all of this is a short-term shock. In 5 years, this entire thing will be a thing of the past. I'm sure a lot of people remember the correction that we had in 2018 and the fantastic year that followed. So last year was just absolutely crazy. We had the stocks flying sky high, valuations that didn't really make a whole lot of sense. It's just fantastic. We have that opportunity again now. All of these companies that we wish we had bought into are low, and they pay great dividends, they're solid, they will turn profits in the future. So how do we buy stocks on a market like this? The answer is incrementally. I'll go ahead and introduce you to my own personal trading plan. So I do lots of research and I look at a stock and I look at its balance sheet and I want to look at how's it going to do in 5 years, because I don't care about now. I care about how it's going to do in 5 years and whether it's still going to be as good of a company as it is today. So when I find that stock, I'll buy some shares. If I'm right and maybe I happen to buy it at the perfect time, it'll go up. Fantastic, I make profits, I'm earning dividends yearly, everything's good. So let's say that I'm wrong. In the event that I haven't quite nailed the bottom of it, I wait until it drops 15% below what it was. If it hits 15% below the last price that I bought a share at, I'll buy some more, which brings down my average. It's going to lower the average cost that I paid for the stock. So ones like Delta, if I had bought at 60, I would have waited for it to drop maybe down to 55 or 50. And then as it kept on going down, and then as it went down more, I'd obviously put more money into it, so my average is slowly lowering as it goes down. So if I keep doing that, my average is eventually going to say right around like 35, 40-ish. Well, when this stock goes back up to 60 and I have 15 shares or something, I'm going to be sitting on quite a hefty profit. Now, I know that I used Delta as an example, but I would really only recommend doing that with strong companies that aren't quite so stressed at the given moment. So companies like Delta and Royal Caribbean and American Airlines, all of these travel and hotel and entertainment stocks that are currently getting absolutely smashed, you want to be a little more careful with them. I've decided that I will only purchase more of stressed sectors when they drop 25%. Is it possible that I might miss some low prices that don't quite hit my my qualifications? Sure, but in the long run, just waiting for that little bit, just waiting for it to hit 25% instead of the 15, could end up playing out big. So even ones like Royal Caribbean, which they have quite a bit of debt on their balance sheet, but look, their share price was at 134, and it's all the way. It hit a low of 1925, which is just astronomical. Can you imagine having bought at the top and getting it now? But if you buy now, and one day in 5 years, when it reaches 134 again, you're going to be patting yourself on the back and wishing you'd bought more shares. So it really all comes down to perspective. So you obviously want to keep putting money in, especially right now because you're getting all these great companies for cheap prices. You want to be a little bit more stringent on the ones that are more risk heavy, the ones that you could potentially make the wrong call on. I mean, even like, for example, Royal Caribbean has been bouncing around. I mean, I've seen days where it's gone up 30%, once it's gone down, another 30%. It's all over the place. If you can just incrementally hit it right on the way down, then you're going to set yourself up for extreme success in the long run. So by buying now, you're doing two things. One, you're establishing a stream of dividend income, because I always recommend that you aim for companies that pay a solid dividend. It's fantastic. I mean, not only is your original money growing, but you're also getting paid little bits of money just to own them. And it's basically free money. Why wouldn't you do it? And then two, you're setting yourself up to make returns when the market inevitably goes back up. So, I mean, should you begin putting money into the markets? Absolutely, 100%. Now is the time. Opportunities like this don't come all the time. They come rare. I mean, we saw one in 2018, and even then, I mean, can you imagine? Oh, I wish that I had been able to invest right after 2008. I wish that I had a whole bunch of money that I could just pummel into the market and just watch my money grow. When the bull starts running, you're going to want to run with it.